While the Western world remains captivated, even hypnotized, by the dizzying heights of its technology stocks and the promises of artificial intelligence, a silent, monumental migration of capital is taking place on the other side of the planet. It's a movement of money so large, so deliberate, and so contrary to the prevailing narrative that it demands our urgent attention. The billionaires of China, the shrewd entrepreneurs and industrialists who built the world's second largest economy from the ground up, the ultimate insiders of the global manufacturing powerhouse, are quietly executing a massive $47 billion bet. This isn't a speculative gamble on the next hot tech stock. It isn't a leveraged investment in another gleaming skyscraper in Shanghai, the very assets that once minted their fortunes. And it most certainly isn't a vote of confidence in their own country's struggling, state-controlled stock market. In a world utterly obsessed with the fast, frictionless, and digital, they are flocking in droves to one of the oldest, heaviest, and most boring assets in all of human history. They are buying physical gold, tons of it. They are trading their paper assets and digital claims for the cold, hard, anonymous security of bullion. Why? What do these insiders, the individuals with the most intimate, real-time knowledge of the health of the world's factory and the most acute sensitivity to the shifting winds of political risk, know that the rest of us don't? When the smartest, most informed players in the room, the ones who can feel the slightest tremor in the economic foundations, begin to quietly cash in their chips, exit the casino, and head for the bomb shelter, it's not the time to dismiss them. It's the time to pay very close attention. This is not just a story about China's internal economic struggles. To view it as such would be a grave mistake. This is a story about a profound, global vote of no confidence. It is a distress signal, a flare sent up from the very heart of the global supply chain, a warning that the engine of global growth is sputtering. The actions of these billionaires are not just about preserving their own immense fortunes. They are acting as unwilling prophets, the canaries in the global coal mine, and their collective behavior is screaming a warning that a systemic shock is approaching. A shock that they believe could detonate and send shock waves across the entire global economy as early as 2026. In this video, we will not be looking at the optimistic charts of Western stock markets. We will be following the smart money to where it is hiding. We will dissect the three critical and interlocking reasons, one economic, one political, and one systemic, that are driving China's elite to abandon the very assets that made them rich and embrace the ancient security of gold. We will explain why this isn't just a regional trend, but potentially the most significant leading indicator of a coming global crisis we have seen in decades. And by the end, you will understand why a $47 billion move into a barbarous relic might be the most important financial story of our time. A story that is being told not in the noisy headlines of the media, but in the silent, heavy, and unmistakable weight of bullion bars disappearing into private vaults around the world. To understand why China's wealthiest are making such a dramatic pivot to gold, we must first understand the complete and utter collapse of the primary pillar upon which their wealth, and the wealth of the entire nation, was built. For decades, the engine of China's economic miracle was fueled by a simple, powerful, and ultimately toxic formula: real estate. This wasn't just an asset class, it was a national obsession, a cultural belief system. For the average Chinese citizen, it was the one sure path to middle-class security. For the billionaires, it was the fountain of unimaginable fortunes. And for the government, it was the primary driver of GDP growth. But this entire edifice was a house of cards, built on a mountain of debt. And now, that house of cards is collapsing in a slow-motion demolition that is reshaping the nation's psychology. This is the blueprint for the great loss of faith. For over 20 years, the model seemed infallible. Local governments would sell land to property developers at inflated prices to fund their operations. Developers, like the now infamous giants Evergrande and Country Garden, would borrow colossal sums of money from banks and investors to buy this land. Then, even before a single brick was laid, they would pre-sell the apartments to ordinary citizens. These citizens, believing that property prices could only ever go up, would often pour their entire life savings and the savings of their parents and grandparents into a down payment for an apartment that existed only on paper. The developers would use this cash from pre-sales to fund construction and, more often than not, to buy more land and start the cycle all over again. It was a giant, debt-fueled carousel, spinning faster and faster, creating entire cities out of thin air and turning construction magnates into multi-billionaires. At its peak, the real estate sector accounted for an astonishing 30% of China's entire GDP. But this model had a fatal flaw. It was entirely dependent on perpetual growth and ever-increasing debt. It was a Ponzi scheme on a national scale. The first major cracks appeared in 2021 when Evergrande, the world's most indebted property developer, finally defaulted on its staggering $300 billion in liabilities. This was not an isolated event. It was the pin that popped the bubble. A cascade of defaults followed. Country Garden, once considered a model developer, followed suit. Dozens of others went bankrupt. The carousel had ground to a halt. The consequences have been catastrophic, not just for the developers, but for the millions of ordinary people who trusted the system. The developers took their life savings but ran out of money to finish the buildings. Across China today, there are an estimated 20 million unfinished apartments in vast, empty, ghost-like developments. These are the homes that families poured their life savings into, homes they are now forced to pay mortgages on, even though they may never be completed. It is a tragedy of immense proportions, a direct theft of middle-class wealth. This crisis has done more than just damage the economy. It has shattered a core tenet of the Chinese social contract. It has destroyed the deeply ingrained cultural belief that property is a safe and ever-appreciating store of value. For the average citizen, the dream has become a nightmare. And for the billionaires who made their fortunes in this sector, the message is even more stark. They see the contagion spreading. They see the banks that are exposed to these bad loans beginning to wobble. They see the local governments, which are no longer making money from land sales, teetering on the brink of insolvency. They understand, with perfect clarity, that the old model of wealth creation is dead. The pillar has crumbled. This is the first and most powerful reason they are running for the exits. They are not just fleeing a falling asset class, they are fleeing a broken belief system. The search for a new, safer store of value has begun, and for many, that search is ending with the oldest and most trusted asset of all. The collapse of the real estate market was the first deafening alarm bell. It signaled the end of an era, the death of the engine that had powered China's growth for a generation. But for the nation's billionaires, the crumbling apartment blocks were only one part of a far more terrifying picture. As the economic foundations began to crack, another, more unpredictable danger was re-emerging with a vengeance: the iron fist of the state. This brings us to the second, and perhaps more primal, driver of the exodus into gold: political risk. For years, China's tech entrepreneurs and financial magnates operated under an implicit deal with the Communist Party. You can get fantastically rich as long as you stay out of politics and remember who is ultimately in charge. But under the leadership of Xi Jinping, that deal has been unilaterally rewritten. The message is now starkly different. No person and no fortune is too big to be brought to heel. The watershed moment came in late 2020. Jack Ma, the charismatic founder of Alibaba and Ant Group, was at the peak of his power. He was a global icon, the face of Chinese capitalism. But he made a fatal error. In a public speech, he dared to criticize China's state-owned banks and financial regulators, calling them an old man's club running a pawn-shop system. The retribution was swift and brutal. The government immediately suspended Ant Group's record-breaking $37 billion IPO, a move that sent shockwaves through the global financial community. Jack Ma then vanished from public view for 3 months. When he finally reappeared, he was a changed man, subdued, humbled, and stripped of his power. His empire was systematically dismantled and brought under state control. The message to every other billionaire in China was chillingly clear. Your wealth, your company, your very freedom exists only at the pleasure of the party. What the state allows, the state can also take away in an instant without due process. This was not an isolated incident. A sweeping regulatory crackdown followed, targeting the country's most successful private enterprises, from online education and gaming to social media. Trillions of dollars in market value were wiped out, billionaires were detained, fortunes were distributed under the banner of common prosperity. For China's elite, the rules of the game had fundamentally changed. Their assets, held in Chinese stocks, bonds, and real estate, were no longer secure. They were, in effect, merely custodians of wealth that could be reclaimed by the state at any time. In this environment, an asset that is physical, anonymous, and can be held outside the state-controlled banking system, an asset like gold transforms from a simple investment into an essential tool for survival. As if this pincer movement of a collapsing property market and rising political risk wasn't enough, the broader macroeconomic picture in China has also turned bleak, completing the trifecta of fear. This is the third layer of risk. For the first time in decades, China is grappling with the toxic specter of deflation, a persistent fall in prices and consumer demand that plagued Japan for decades. The official youth unemployment rate has soared to such alarming levels that the government simply stopped publishing the data. The domestic stock market has been in a brutal bear market for years, wiping out the wealth of the emerging middle class and further souring sentiment. And beneath it all lies a mountain of hidden debt, not just in the property sector, but within local governments, which are now struggling to pay for basic services. The entire economic model that lifted hundreds of millions out of poverty is now running on fumes, sputtering under the weight of its own contradictions. So, you have a situation where the primary store of value, real estate, has proven to be a trap. The secondary store of value, the stock market, is a losing proposition. And the very ownership of your wealth is subject to the arbitrary whims of an increasingly authoritarian state. For a Chinese billionaire, the question is no longer, how do I generate the best return? It has become, how do I get my money out and where can I put it that is safe? This isn't a choice, it's a desperate necessity. They are not investing in gold. They are escaping to it. Faced with this perfect storm of collapsing property values, unpredictable political crackdowns, and a stagnating domestic economy, China's wealthy elite are desperately searching for a financial lifeboat. And in this search, they are rediscovering the unique and timeless properties of an asset that has served as the ultimate store of value for 6,000 years. This brings us to the indictment. Why gold? And why does their flight to safety signal a global warning for 2026? The perfect escape hatch. Why gold? Why, in an age of digital finance, are they turning to a heavy, analog metal? The answer lies in what gold is, and more importantly, what it is not. First, gold is a tangible, physical asset. You can hold it in your hand. It is not a digital entry on a bank's ledger that can be frozen or erased with a keystroke. It is not a stock certificate in a company that can be targeted by regulators. In an environment where digital and paper assets are increasingly precarious, the physical nature of gold offers a profound sense of security. Second, gold is no one's liability. Every other financial asset, a stock, a bond, even the cash in your bank account, is a claim on someone else. A bond is a claim on a government or corporation to pay you back. The money in your bank is a claim on that bank. If the entity on the other side of that claim goes bankrupt, your asset can become worthless. Gold has no counterparty risk. It is an asset that stands alone, its value determined not by a promise, but by its scarcity, its durability, and millennia of human trust. Third, gold is anonymous and portable. While moving large sums of money out of China is notoriously difficult due to strict capital controls, gold offers a discrete and concentrated form of wealth that can be more easily stored or moved across borders. It is a form of wealth that lies outside the state's panopticon of financial surveillance. Finally, and most critically, gold is the ultimate hedge against currency devaluation. The Chinese government, in its desperation to stimulate its flagging economy, is under immense pressure to devalue its currency, the yuan. A weaker yuan would make Chinese exports cheaper, but it would also decimate the purchasing power of anyone holding their wealth in yuan-denominated assets. By converting their yuan into gold, the billionaires are making a clear bet. They believe their own currency is going to lose value, and they are moving to protect their purchasing power before it happens. Gold, for them, is not a speculative bet. It is an insurance policy against the actions of their own government. The state joins the rush, the People's Bank of China. But here is where the story becomes truly compelling. This is not just a story about a few dozen billionaires. The flight to gold is happening at every level of Chinese society, right up to the very top. The single largest buyer of gold in the world over the past 2 years has not been a wealthy individual, but another, far more powerful entity, the People's Bank of China, the nation's central bank. For over 18 consecutive months, the PBOC has been relentlessly adding to its official gold reserves, buying tons of the metal on the open market every single month. This is a massive, strategic, and undeniable shift. Why would a central bank, the issuer of the nation's currency, be stockpiling its primary competitor? The answer is twofold. First, it is a strategic move towards de-dollarization. By holding more gold, China reduces its dependence on the US dollar as its primary reserve asset, insulating itself from US financial sanctions and the inevitable decline in the dollar's own value. Second, it is a move to shore up confidence. In the event of a severe domestic or global financial crisis, a large gold reserve provides a bedrock of credibility for the yuan. It is a signal to the world that even if its real estate market collapses and its economy slows, its currency is still backed by a real, tangible asset of universally accepted value. The fact that the state itself is pursuing the exact same strategy as its richest citizens is the ultimate confirmation of the thesis. Both the elites and the government are preparing for a severe monetary storm. The canary in the coal mine, the 2026 global crash warning. This brings us to the final critical point. Why does this massive flow of capital into gold in China matter to someone in London, New York, or anywhere else in the world? It matters because China is the canary in the global coal mine. For the past 30 years, the entire global economic model has been built on the foundation of China as the world's factory and a primary engine of global growth. A severe, prolonged economic crisis in China, a hard landing, would not be a contained, local event. It would trigger a devastating deflationary shockwave across the entire planet. Global supply chains would be thrown into chaos. Demand for raw materials, from oil to copper, would plummet. Western companies, from Apple to Volkswagen, that depend on the Chinese market for a huge portion of their profits would see their earnings collapse. The billionaires dumping their assets into gold are the ultimate insiders. They can feel the tremors in the Chinese economy long before they show up in official GDP reports. Their actions suggest they believe a Chinese hard landing is no longer a remote possibility, but an impending certainty. This is the 2026 warning. A systemic crisis in China, starting now and potentially culminating in a full-blown crash over the next 18 to 24 months, would inevitably spread to the highly leveraged and interconnected Western financial system. It could be the very catalyst that pops the everything bubble. The flight of China's elite to gold is not just them losing faith in their own economy. It is them, the ultimate insiders of globalization, losing faith in the stability of the entire global financial system as we know it. When the people who run the engine room of the world's economy start quietly heading for the lifeboats, you don't just stand on the deck and admire the view. You start looking for a lifeboat of your own. There is an old saying on Wall Street: watch what the smart money does, not what it says. In our modern world, this has never been more true. While governments and central bankers fill the airwaves with reassuring rhetoric about soft landings, transitory inflation, and resilient growth, the smartest money in the world's second-largest economy is telling a very different story. Their actions are speaking far louder than any official press conference. They are not issuing warnings. They are not writing editorials. They are quietly, systematically, and relentlessly moving billions of dollars out of the paper assets that built their fortunes and into the one asset that cannot be printed, cannot be devalued by decree, and cannot be easily confiscated: physical gold. This is not a vote. It is a verdict. It is a verdict on the future of their own country's economic model, and it is a verdict on the stability of the entire global financial system. This isn't an academic debate about monetary policy. It is a real-world, high-stakes signal from the people who have the most to lose and the most information to act upon. They are the insiders of the global supply chain, the masters of the manufacturing universe. They can feel the subtle slowdown in orders, the rising stress in the credit markets, and the shifting political winds long before these trends become headlines. Their collective action is a powerful, unified message. They are preparing for a crisis. They are preparing for a world of increasing instability, currency devaluation, and political uncertainty. They are trading promises for certainty, paper for physics. When the people who are closest to the engine of the global economy start buying insurance as if their financial lives depend on it, it is the ultimate warning sign. The lesson from their $47 billion bet is brutally simple. Stop listening to the reassurances and start watching the exits. The great migration of Chinese capital into gold is more than just a headline. It is a live-action case study in the preservation of wealth. It is a playbook being executed in real time by some of the world's most sophisticated and well-informed investors. Understanding their motives, their fears, and their strategy is not just an intellectual exercise. It is a crucial piece of the puzzle for anyone trying to navigate the increasingly complex and treacherous financial landscape of the 21st century. Money never lies. The flow of capital is the purest signal of conviction in the financial world. It cuts through the noise of political spin and central bank rhetoric, revealing where true confidence is rising and where it is collapsing. Following these massive capital flows is one of the most effective ways to understand the real risks and opportunities that are forming beneath the surface of the global economy. Our mission at Economic Echoes is to do exactly that. We are not here to give you investment advice. We are here to provide you with a framework, a historical perspective, and the critical data you need to see the world as it is, not as policymakers wish it to be. We are here to follow the smart money, to dissect its movements, and to translate its silent actions into understandable insights. If this deep dive into the great Chinese gold rush has given you a new and valuable perspective on the forces shaping our world, then I invite you to subscribe. The story of global capital is an ongoing saga, with new chapters being written every day. The headlines will tell you what has already happened. The flow of money often tells you what is about to happen. Subscribe to Economic Echoes, and let's follow the money together.